This is Traders Workshop with Adam H. Grimes. Hello, and welcome to episode 10 of Traders Workshop, First Steps in Learning Technical Analysis. I'm your host, Adam Grimes. You can find more of my work at adamhgrimes.com, and you should follow me on Twitter at adamhgrimes. So this is a continuation of the series with Tom and I talking about how to learn trading, how to learn aspects of trading. And I do want to say in the first episode, which was episode 8, where we said the most important thing for a new trader was to start to get some trading experience. We probably did not emphasize enough that that's because the emotional reactions you have when you see your P&L move are impossible to replicate any other way. We kind of danced around that, but I don't think we made it clear enough. So in speaking afterwards, we realized, hey, we should have said this. So that's why I'm saying it now. But in this episode, we talk specifically about technical analysis and some of the challenges of learning, especially at the beginning. It can be a little bit overwhelming. So we hope to help you focus. With that, here we are. So I'm back here with Tom.
Hello, Adam.
And we were just discussing the previous episode we did where we were giving the one conversation advice to a want-to-be future trader. And you said to me...
Well, I started talking about how a lot of the process is on the person.
Right.
And sometimes, you can tell some people, they just kind of have this unstoppable curiosity or, desire to make it happen. And it's not just with trading, but, like I have one of my best friends is a filmmaker, and like you can just tell there's like nothing else in the world for him. Like he will live in a box and make movies, right? Like nothing will make him give up ever. Like he will sacrifice future, family, everything for what he's doing. And it doesn't always have to be maybe that severe, but I think there is some truth in that sort of, being.
Well, you said a word that I think is very powerful, curiosity.
Yeah.
And another word that you were circling around, but you didn't say what I was thinking, is the passion for it.
Yes,
and
curiosity and passion.
People throw that passion word around a little,
Mm-hmm.
Now everybody knows it's what you're supposed to say in an interview. So when some kid goes for an investment banking interview, they'll say, I really have a passion for doing spreadsheets. Mm-hmm. Well, no, you don't. It's silly, but the things that we are so driven to do that we almost can't imagine existing without those things. Yeah. Something like, can you trade as a casual hobby? I think so, with some degree of success. I think you certainly could manage a retirement portfolio without a huge investment of time. But if you really want to be, quote, a top-level trader...
Well, working off of that, the passion stuff, I think that can also sometimes be misleading, because I think people sometimes think they're passionate about something, but it's not where they put their effort.
Right.
So I think sometimes, if you self-reflect, you'll realize like, wow, I think I'm passionate about this, this topic or this thing over there, but I find myself just sort of spending most of my time, doing something, writing short stories, whatever it is, right? So,
which may sometimes reveal another thing you should be following, or may just be avoiding the work, because it's very easy to have something you want to do and then to replace the time with meaningless little games on your phone or whatever. Something, and I guess that's kind of a philosophical life question. Are those things meaningless? I think most of you listening know that I was a pretty serious musician in a previous career. And to succeed in that field takes a supreme degree of passion, both for the result. So here's kind of the interesting thing, and here's how I'm not quite sure how to think about it. So you have passion for the result. You want to be able to do this thing, as a pianist, maybe you listen to the Chopin etudes and you say, I want to be able to play those. So you have this idea of something kind of magnetically drawing you forward. As a trader, what is your lighthouse that you're drawn toward? Is it, it will change over the course of your career. As I said, at the beginning, I thought I was going to corner the soybean market starting with $2,000. I wasn't. But so at the beginning, maybe these sort of flashy false marketing messages are kind of a good motivating thing. You can say, my life could be different if I had this skill, if I had this money. So you have the end result. But then here's what I'm not sure about. Is it just a matter of, do I want that enough that I'm going to work really hard to get it? And both of these things that we're talking about, trading or music, if you started as a musician and you had a lot of time to devote, you could develop some serious skills in 5 years. We're talking about multiple years for these things. Do you want it enough that you will work for those 5 years? But I think there's something else. I think it's not only passion for that result, but it's passion for the process of getting there.
Yes.
So if you are a musician, you will have to become passionate about building your technique. You'll have to become passionate about putting in the 8 hours. And here's where the word passionate becomes a little bit, could anybody really be passionate about tearing a Bach fugue apart for 6 hours a day, 2 weeks in a row, every single day, looking at each voice, looking at all the combinations of voices against each other? At some point, it just becomes work. But you still have to be really motivated, really driven as much by the process. And the same thing with trading. You have to, this learning curve, which is going to cover both practical and academic, you're going to have setbacks. You're going to be putting in a lot of time, and you got to really be into it to do it, I guess is what I'm saying.
Yeah. Well, because without that, you're more likely to probably give up when you suffer a setback.
Which you will.
Yeah, which you will have many.
Right. So that's one of the things I said in a recent interview that some people objected to. As a trader, you're almost always in a drawdown. Mm-hmm. People don't realize that. Like if you, just sit down, I'll do this. Just sit down and grab a piece of paper and kind of draw like a wiggly upward sloping equity curve. And then if you look at that and you go through and mark the equity peaks, and you will see that most of the time you're actually under those peaks. Mm-hmm. The times in your trading life when you are making so much money that, when you're just making a new high in your account, those are relatively few and far between. Most of your life, you're in some variation of drawdown, which means you're experiencing some variation of setback.
Yeah.
So I think that idea about really being self-motivated enough that even if, we set up that great theoretical question, if you could just have one conversation with a mentor or a teacher. But the reality also is that so much of the success is going to be on you and because of you.
Yeah.
Even if you have the teacher there. And it really comes down to you having the grit is the word. Mm-hmm. There's been quite a bit of
heart. I don't know.
Yeah, just sticking with it. So we also wanted to there's our tale from the previous episode. We wanted to talk about how you start learning technical analysis. Mm-hmm. Specifically, and we'll talk about other forms of finding an edge, but technical analysis is, if somebody said to you, what is technical analysis? Like, how do you even answer that? How do you start?
Oh, that's a good question. How do you start? I would say that maybe a better question is, what would someone's first impression of technical analysis be if they just searched for it?
I would think and I can do it here, and you will hear my
Clickety click.
mechanical keyboard. I would think if you just searched for it, you would probably think that technical analysis was about chart patterns.
Right.
Or maybe indicators. Probably, maybe.
A little bit of both.
Right. And it's not exactly wrong.
It's not wrong, but it's not the whole story. And I think it could be easy for someone who's new to kind of start thinking that it's these sort of magical, patterns on charts.
Which is, in fact, how most of us started.
Yes,
right?
It is. It's how. Yes, exactly.
Yeah, I told
Magic
you.
moving averages and candlesticks.
Yep. And I even, for many, many years, I thought there were like really powerful ratios, and I programmed them. And, I thought that there were all of these things that would give me some secret insight that everybody else is missing. So how do you, okay, now I'm going to throw the question at you.
Oh.
So you're standing on the street corner with the trader who is going to stand there through several changes of the light with you. So,
yes, so be very patient.
You don't have to squeeze it into to 40 seconds. And this person says, yeah, so, okay, you, Tom, you're a technical trader. You understand technical analysis. I don't know anything. How do I start? How do I learn? How do I become a technical trader?
I would, after I directed them to your course,
Thank you.
and maybe repeated some of the spiel from last episode.
Which is hard not to repeat that because it's so important.
So if you haven't heard that, go listen to that.
Yes.
I would say that probably the first thing you might want to learn about are trends. If you want to be specific.
Yeah.
Like, and it might sound overly simplistic, but just, if you know nothing, the simplest way to start might be just like learning to read trends on charts. And that right there could be the beginning of sort of your maybe edge.
And the irony of this is that it's all actually pretty simple.
Yeah.
I trade a lot of pullbacks. Many of you know that. And I've had many, many conversations and even some presentations I've done where I say, okay, I'm going to talk to you about trading pullbacks. And people are like, oh, that's so basic. Everybody knows that. And then you follow up with a question, well, how much money have you personally made trading pullbacks? Oftentimes there's thunderous silence, because people are always seeking some novel, some complicated, some flashy analytical technique, but really the simple stuff works very, very well.
Yeah. And you really have to start, because you can't just start off being like, well, learn about trading, short antes on,
But what's that mean? We're standing on the street corner. Mm-hmm. I don't have any charts. You can't pull out your phone. We'll add that to, just there's no visuals. What do you mean learn about trends? Like how would I do that?
Higher highs, higher lows, and vice versa.
So you would you'd pull up a price chart, and you got to pick your market. And this also goes back to our advice to that newer trader. As you start trading, you got to start looking at charts. You have to start looking at data. And I do know that there is a certain subset of you listening to this podcast who immediately are suspicious because I said chart. Yeah. People are, particularly quantitatively minded people or people from a fundamental analysis perspective. When we start talking about charts, they get very, very suspicious. And they say, well, charts are garbage because people just talk about patterns. I would definitely recalibrate that perspective, because what a chart can do, a chart of anything, like if we're talking about, unemployment numbers, if we're talking about CPI, I can tell you where the numbers are in relation to the 1960s all you want. I can tell you, it went up to here after the recession and now but once you see it on a chart, you instantly, it's a heuristic, and that word means kind of a mental shortcut
you can really understand a lot about a data series just by looking at a chart. And even if I'm looking at something very complicated, like I was looking at changes in volatility with a time lag based on the kurtosis of the distribution of the daily returns of the S&P. So I was basically looking to see if there were subtle aspects of the way that the stock market moved that could predict a change in volatility in the future. And that's a highly quantitative investigation. But when I put it on a scatter plot, when I made a chart, basically is what I'm saying, I was able to understand the data in a way that I would not have been able to understand in any other way. So if you do have a prejudice against charts, I would strongly challenge you to rethink that. Now, many of you don't have a prejudice, and in fact, many of you, when you start trading, you'll be very comfortable with charts. But just if that is you, also realize that a chart is a really powerful thing. It's more powerful than you realize at the beginning.
Yes.
So we tell them to start looking at charts, and we tell them to look for trends, which are basically places where markets move from one price to another.
Right.
As opposed to a trading range where they're kind of in the same
back
price.
and forth.
But then to play devil's advocate here, if I'm that person, I'm going to say, well, how long does it need to be for a trend?
Well, then you get into the question of time frame.
Right.
So, wow, we haven't touched on time frames of trading. So There's another episode.
Right.
But if someone was new, I'd probably, advise them to stick with daily time frame.
So you're trading daily bar.
I wouldn't throw them into day trading or reading 5-minute or tick charts.
Right.
And I think monthly charts would also probably be
a little too slow.
Probably, right. So daily charts, maybe weekly charts. But I think once you identify trends, then you can try to learn about trend failure.
How trends
exactly.
Yeah.
So you layer on top of it all, and then you try to gain an understanding of the market structure so that you can have positions on the right side of the market. That's really what it's about.
Yeah. So you tell the person step one is you look at charts and you start to understand trends.
Yep.
And I guess I would throw in then a step two. Every charting package in the world, you're going to be able to put some moving averages on a chart.
Yep.
And a moving average is a little bit of a complicated topic because a lot of people are going to tell you that you can buy on a touch of a moving average or cross of a moving average. And much later, we're going to come back with this person, we're going to come back to the idea of you can't really do that in the way everybody says.
Right.
You are not going to be profitable. But at the beginning, you've told them about trends. I would tell them, start looking at some moving averages. And don't get caught in this trap of what is the best moving average. Don't get caught in this trap putting 5 moving averages on your chart. Just pick kind of a mid-range moving average. I don't know what, maybe 15 to...
I don't know, the 20.
Yeah, I use I'm trying not to tunnel vision on what we use. I use the 20 period exponential. It's a good place to start. In fact, I would tell somebody to start there. But if you're looking at, let's say, so let's stick on daily charts so we can talk in weeks.
Okay.
So if we're talking daily charts, a week is 5 days, just to be clear. Sometimes it's easy to get confused with that because you think 7 days to a week, but there are 5 trading days in a week. And so a month on most daily charts is about 20 trading bars, roughly. So what I would tell that person is that you probably want your moving average to cover a few weeks to at most a few months.
Right.
So then we're looking at a period of, let's say, maybe 15 to 30, maybe 40 at the outside for your moving average. I find 20 is a pretty good measure. If you go shorter than that, and oh, by the way, you should experiment. What happens if you put a 5-period moving average, or, like all of us at the beginning, when you're kind of trying to figure this out, you'll go to the limit with these things. Say, what if I put a 1-period moving average? Congratulations, you
built a line chart.
You just recreated the line chart, yeah. But seeing how playing with different parameters. And if you have like 1,000 period moving average, it's not going to move at all. So you probably want some kind of intermediate period moving average. And then I would just tell the person, you're thinking about trends, just notice here at the beginning, at least, the moving average kind of tracks the trend direction. And I think that's a very good way to start. And you have those things, trends, moving averages, then what?
Then I would probably say chart patterns.
Good. Like what kind of chart patterns?
Flags
Okay.
probably would be the way to start. Flags, breakouts. I think probably ways to take advantage of stocks that are trending somehow.
So you're looking for, and by the way, just so you know, we're doing this in one cut with no editing. You hear some urban background noise
yeah.
here, which,
My brain automatically tunes it out.
yeah, which is good. I could tune it in because I was listening to what you were talking. Yeah, so you're looking for, obviously markets don't start at one price and go to another in a trend, which is what we told that beginner the trend is, moving from one price level to another. But then you're looking for what kind of structure is in the trend. Then you'll see that a market will go up, let's say it's an uptrend, and then it will go flat, or it will go up and then it will go down a little bit, but then it'll go up more. And so these patterns that we have that kind of crystallize this trend structure, it's probably a pretty good way to go. What do you think about like the traditional chart patterns, heads and shoulders? People talk about a lot, rounding tops and bottoms. What's the place of those?
They're maybe, every new trader, or maybe not, most or a lot of new traders learn about those when they're learning technical analysis. I certainly did.
Yeah.
I find that there may be overcomplications of simpler sort of price structure.
Right.
There's just complicated ways to explain potential trend changes or pullbacks. You don't need to give everything a fancy name if it's just a pullback that looks a little different.
Right. That was really one of the revelations for me, was when I started thinking about the zigzag trend structure. I realized that all of these patterns that I used to think were so important, and just so you can visualize, let's just put up a few of them. So like a double top, you have a market that's zigzagging higher, and then it makes a peak that's the same as a previous peak. Or a triple top, which obviously you can figure out what that would be. Or the head and shoulders, which is where it's zigzagging up. Then it makes a higher zigzag and then a lower zigzag, which, by the way, is kind of like that 1, 2, 3 top that I was talking about. So all of these things that we think are kind of these separate patterns, if you start where you said to start, with understanding the trend and understanding the structure and the trend, you see that these... really, they're kind of all the same thing.
It's a different way to say that say for an uptrend, the pattern of higher highs and higher lows has changed.
Right.
So in the case of the double top, you failed to make the higher high. So
I would say there's probably also some value in studying these, just because everybody is going to talk about them.
Oh yeah, I think you should certainly know of them and what sort of the people think.
Because this is, the discipline of technical analysis kind of has a lexicon that, to my mind, is very jumbled and confused, because people use different words for the same thing, or they use a word and, that sometimes they'll just use words that don't mean what we label them. It's very strange. Like there's an indicator called stochastics, and stochastics is a mathematical term that has nothing to do with it. You may as well labeled the indicator cherry pie. It has nothing whatsoever to do with it. And that definitely is confusing. But still, if you hear some guy talking about a head and shoulders pattern, you probably want to be able to visualize what that person's talking about on the chart.
Yeah, absolutely. And a rounding top or bottom, all of these things.
So trend structure, chart patterns. What do you think about indicators?
depends on the indicator.
Exactly. So, how many?
I think it's an easy trap for a lot of new traders to fall into, where they overload with indicators.
Yep.
What
indicators have you used, or have you not?
I have right now in my charts. I have the fewest amount of indicators I've ever had.
Okay, and I don't know the answer to these questions I'm asking him, so this is live and unscripted. What have you used?
When I first started getting into it, I had 6 moving averages on my chart.
Oh my God!
I had
Were they different colors?
They were different colors. I had the 20-day simple. I had both simple and exponential moving averages for the 20, the 50, and the 200. And they were just slightly different shades. So the 20 they were slightly different shades of blue.
Oh, so you had the ribbon thing,
and
right?
The 50 were different shades of like a yellow, and the 200 different shades of red. And then I also had Bollinger Bands.
Okay.
I had I probably had an RSI somewhere on the bottom. I don't know. I forget. Maybe a MACD. I forget. So.
And you probably. Pretty much any indicator you probably had on your chart at one time or another.
Yeah. Oh, sure. You try them all, right?
Right.
You put them on the chart. You see if it works, or it's easy. You say, oh, well, this indicator works on these stocks, but not on these stocks. So I'm going to use it on stocks X, Y, and Z because it seems to work there. Not really understanding yet that's not.
Exactly.
Yeah.
Right. Or I guess people will wonder what my answer to that is. And I would say the same thing. I've had everything.
Yeah.
There was a time I built this really cool looking like 3D ribbon out of all and people are now doing the same thing. It was almost this perverse thing back in the early 2000s where people would kind of try to make the most complicated looking chart.
Yeah.
And I definitely participated in that. Because it looks smart, right? Mm-hmm. You pull up a chart and it looks like the cockpit of the space shuttle. Yeah. And you're like, whoa, this guy must really know what he's talking about. And if I could send one of my current charts back in time, I would say it's this guy's deal.
Right.
But interestingly enough, there was also at the same time there was that, and people would exchange chart porn, which was not porn. It was, just to be clear, it was
fancy looking charts,
different indicators and settings on charts. There was also this movement where people got very vociferous about price action trading, which was trading naked. They said where you wouldn't have anything on a chart. And I saw people just have explosions. If you have a moving average on your chart, you're not trading price action. Yeah, because and it was just a reaction against the absurdity of the time. But I think this is almost maybe an unavoidable progression for a trader to try a lot of these things.
You have to experiment, try things out, see what works and what doesn't.
I even had I had this panel where I probably had 8 or 9 indicators under my chart, and I even had like different, very close variations of RSI. Mm-hmm. I'd have like RSI 14, RSI 9, and a 3-period RSI. And one of the real dangers with this, by the way. I'm going to throw out a big word here, but multicollinearity is a term, that's a big word, right? It's a term that applies to building decision models and regression models. And what it means is that if we have inputs that are correlated themselves, mm-hmm. so they're showing you the same thing. It's like if you want to make a decision and you ask 5 friends, and the friends are all dumb and don't have your best interest. You ask 5 friends who tell you to go jump off of that bridge. Oh, it'll be fine. Don't worry about it. You get 5 people's opinions, but maybe they weren't worth much.
Yeah. And you need new friends.
You definitely need new friends. And I came to that decision in my trading. I need new friends on my charts. But this is the problem with when you see somebody, they'll put up a stochastic and an RSI and a MACD and a CCI, and they'll say, well, I'm only going to take a trade when all of these agree. So they're looking for, quote, confirmation. Mm-hmm. But what these things are actually doing, of course, they're all measuring They're all processing price, open, high, low, close, sometimes volume, sometimes in very rare cases, open interest, and maybe action from another market. But all indicators looking at the same data. They're all basically using open, high, low, close. And if you have things that are processing this data in the same way and they're showing you the same thing, you may be getting more confidence, but you're not getting any better decisions.
Right.
And there's a ton of work on decision modeling that shows that simple models are best. And we certainly see this. I know we're talking technicals, but we see this in our macro and fundamental modeling, that the best models we have for predicting regression or recessions have 1 to 3 inputs, and a lot of the Fed models have 20 plus. And those complicated models are naturally ignored by the investment community. People know they don't work, but it really takes some guts to say, hey, I have this simple model that has 2 inputs. My charts now have MACD, which I don't even look at. There probably will be a time in my future when I take the MACD off the chart. The only time I use it is to illustrate a point to a developing trader. And so maybe there is some value for developing traders. You can see momentum shifts in some ways, but I do find that having a band, some kind of band around that moving average, I use Keltner channels. You certainly could use Bollinger Bands and get the same thing. That to me is very important, but just be careful about ending up with too many indicators.
Yeah, and I think part of a trader's natural progression will be shedding some of those excess indicators.
And to get there, you have to have the
exactly.
have the excess indicators.
So I realized that what I was doing was, having all these indicators, but what I was really trading were just pullbacks and uptrends or pauses, and so the moving averages weren't, they weren't magical or anything. If they're just helpful because you're buying a pullback in an uptrending stock.
And at some point you notice that you're not using the tools over and over. Yeah. And like I just said about the MACD, I think in my case, I could make a compelling reason why I leave it on the chart for educational purposes. But if you have 3 indicators on your chart and there's one you never look at, try taking it off.
Yeah, eventually it's like they get in the way of reading the chart.
I think it's very true.
Yeah.
Yes. Yeah. Because what you're really trading is that structure of the trend.
So I'm like, oh, these lines are in my way. Get them off.
So step 2 here for our beginning trader who has had the experience of moving in and out of the market some, probably gotten kicked around by the market, maybe had some successes. Now this person has kind of turned the corner, and how do I learn technical analysis seriously? Our suggestion was to look at trends, to look at the structure in trends, look at moving averages, and start exploring indicators. And I think now, once that person has had some of those initial experiences, maybe some of this work could be done on a paper trading account?
Yeah.
Or maybe even back testing, which I guess is another topic.
Back test, that's another topic.
All right. So we don't have that kind of time today. So I guess that's probably a good place to wrap up here.
Yeah. We'll be back with more.
And that wraps up another podcast. Thank you very much for your time. Why don't you go check out what we're doing at marketlifetrading.com. There's a lot there. It'll take a little bit of time for you to get used to it and see what we're doing, and we'll send you some emails along the way. But that's marketlifetrading.com. Also, please subscribe, leave a review for the podcast. We certainly appreciate that. And we'll see you back soon for another episode. Thank you very much.
It's never hard